Welcome to the Challengers Podcast. This is episode 9 with your host, Zack Miller from Tearsheet. And
what's up? It's Josh Markrode.
Hey, Josh. Josh, also known as Josh Liggett, JL.
Josh, also known as Josh Liggett. I know.
Exactly.
I was trying to hit the share level of. There's also 3 other
Satoshi.
people who work at our crowd. Satoshi, from first name basis.
So we're here. It is summer, so I think we should start with that. And though there is a lot of news and stuff to cover, it is not bombastic. I think this is probably going to be a relatively shorter episode. Fair?
Yeah, I would say so. I think we all have to go to the beach. We're gonna have we have to make sure we relax and get that summer fun in before earnings start to come in and things start getting nuts in the in finance. But a little fun.
Well, we did have some big news. So N26 finally launched in the US, and this was a work in progress. Been dozens of months. I don't think there was any reason, like there was no holdup per se regulatory wise. N26 ended up launching with a partner, Axos Bank. And they started letting in like 100,000 people off of their waiting list. Is that what we read?
I think something like that. Yeah, it's pretty much a soft launch, restaurant style to get that, make sure that everything's not screwed up, I assume, make sure that the steak is seasoned correctly as they try to put out their banking product. But I open up the app to see what it was looking like. I think it's 100,000 that they're letting in. They're going to open that up as time goes on.
Right, and they launch with some basic functionality, and they'll start to roll out more of the technology that N26 is known for over time as it matures in the U.S. So they were really the first foreign challenger bank to open up in the U.S. Right, like we know Revolut and Monzo are sort of waiting in the wings to get licenses. It looks like N26 decided to launch through a partner that got it to market faster, right?
Yeah, definitely. Can we just take a second?
Yeah,
and
let's
think. Finally, it actually happened. I didn't. You and I joked around that we didn't think it was ever going to happen.
Right,
that they were like continuous.
Yeah,
it's like, oh my god, they're good. It's happening. They're coming. They're coming. And then, I mean, Finn couldn't have held out for like 3 weeks. Come on, come on. I wish.
Why were they holding out? Where would have that gotten Finn anyway? I mean, I don't know.
I wish. I can only wish and dream. But yeah, I think it's a smart path. I think we didn't really know exactly if they were going to go through the bank account, if they're going to make their own license, or if they were going to go directly, through a partner. It seems like what they were saying is that they were, the plan was to go through a partner. Yeah, which makes sense, because that's what they did in Europe, and Europe is much less complicated, at least in terms of multi-states than the U.S. Just on that level of just geographies, the EU versus
the passporting and stuff.
Yeah, all that fun stuff. So I think it provides other challenger banks from Europe a pretty clear path of, hey, you want to open up in America, this is how you do it, and it's going to be surprising, that's how they can. And
so interesting game dynamics right now. So first to market, right? So they do have an opportunity now to sort of
first
go after
first European to market,
exactly.
Which is very important. That's
good point.
Let me put a note on that, because there's this bank called Chime you like to talk about a lot.
Of them too. Right, it's not the first challenger bank by any means. It's the first foreign bank coming to U.S. soil, European bank, I should say. But what's interesting now is Revolut and Monzo, as they're waiting for their license, or however they decide to go to market, they get this fast follower dynamic where they can kind of see what N26 is doing and maybe avoid certain issues. I think there's a plus and minus to both strategies, I think.
Yeah, definitely. I think there definitely is a play. It could go either way. At the end of the day, though, I think that this is just great for the end consumer. Really, is just have more options. More choices, more ability
going down.
Yeah, this is just good, and I think it's good for the ecosystem as well. I think that you do have in the U.S. at least, you do have a pretty, it's not like in other countries the banking systems are really screwed up. U.S. I think is not as screwed up as in terms of personal finance as other countries. People may not like it, but it's just not as really totally messed up. The fact you have free checking, free banking, free bank accounts, all that stuff, and in certain places free ATM withdrawals, like some pretty cool basic things that a lot of people take for granted. But it's still, as more of these challengers come in from Europe or foreign, or if it'd be awesome to see if like Nubank ever decides to, from Brazil ends up coming into the US, but it just provides a better service for the end user. I mean, that's like the reality of at the end of the day of what really who's winning in this whole situation.
Yeah, I think what's interesting also is the fact that they did it through a partner, through Axos. We had on the Tear Sheet podcast last week the CEO from Synapse, which just raised also a nice round of financing, and it's really sort of an API bank in the U.S. Should be able to launch any products from that. And I think it's getting easier and easier if you take this partner route to launch new banking products. And I think, N26 obviously the first large European to come to U.S. soil, but like we'll definitely see more domestic players now with these technologies. Jan Muncher, who actually publishing from Anthemis, we're publishing a podcast today, interviewed him, and he said like he was an early investor in Simple, and he said when they saw the Simple business plan, it took 2.5 years to get them a product to market. And now when he's meeting with new fintechs sort of launching, that launch time is cut down to like 4 months, he said. So with tools like this, really anybody, you could launch a bank, Josh.
Yeah, and I think you're touching on something that we have discussed in the past, but it is really important to note that let's say, for example, that the first person who really, I don't know how the banking as a service was initiated in terms of people saying, hey, I'm going to create this thing called banking as a service. I don't know if it was a challenger bank asking it. I don't know if it was like a challenger bank saying, someone saying, hey, challenger banks need this in order to expand. But if it did come from the idea, I would assume that it originally came from like the idea of, opening up a new bank that was, like a challenger, which we call challenger banks now, the Chimes, the Revoluts, the Monzo.
Actually, I actually think I know the answer to this.
Tell me the answer then before
again,
sound like an idiot.
No. I will stop you there. But so Green Dot claims ownership over that term, and that their investor community started using that term for what they were doing with Walmart originally. When Walmart issued its first debit card, it was Walmart, the massive retailer that wanted to get into financial services but didn't necessarily want to be a bank. That was sort of the emergence of the banking as a service terminology.
So thank you. First of all, thank you for that, Professor Miller. I really appreciate that. But actually, and it actually makes it even better because it goes in line with what I'm saying is that it provides like a pathway for non-fintechs to get into banking.
Exactly.
Which N26 and Revolut, I was watching that whole like milkshake. What do you hire a milkshake for? By the Harvard professor who wrote Innovator's Dilemma.
Clay Christensen.
Yeah, Clayton Christensen. And like, looking at the milk, people thought like the milkshakes competitor was was other milkshakes when in fact it was like breakfast. It's like a whole like speech. It's really cool.
Mm-hmm.
That like people were buying milkshakes basically for their car. So it's like you would think that the competitors to, N26 are JP Morgan, are Monzo, but it's because of what they've built, because of the infrastructure that they've built, it could be that Uber is the competitor.
Really good
and
point.
This is something that we're getting into, that sort of the path that they took to get to market could be their downfall, as crazy as that sounds. This creating this weird banking as a service ecosystem that Walmart created, which is, if you think of Walmart's somebody who just wanted to like, hey, let's eat everything up. And can you imagine a tech company trying to eat everything up? I think it's
called Amazon, I think.
Yeah. Yes, exactly. That's literally what Amazon and Facebook are. I don't know. I haven't heard of Facebook coming out with some sort of payment tool. I've heard some rumors about this blockchain-based payment tool that they're making.
About it, yeah.
Some weird thing about that. But it's like, come on, like it's crazy that something that Walmart, created, or like, and this concept that with technology has been blown up to a totally different level, that's now helping challenger banks go to market, could actually help screw them over at the end of the day.
Interesting. So N26 on top of this US launch ends up raising some more money on top of a $300 million round, another $170 million. I don't know if it's an additional
why not
70 or
decimal point.
Right. But the point is that they got to a $3.5 billion valuation on 3.5 million customers to date. Comes out to $1,000 a customer. Is that good? Is that bad? I don't know.
Define customer, please.
Yeah. Account holder.
Someone who decided to open
sign up. Yeah. Somebody that has an ATM card. Yeah.
Downloaded the app onto their phone.
Yeah,
You know?
good point. Good point with that too. So also Revolut is in the market, rumored to be raising more money, raising like 500 million. Also talking about like a higher valuation. So we're seeing definitely the step up here. Um, Monzo recently raised money. They were valued at 2.5 billion. So this top strata of challenger banks are definitely unicorns at this point. We did in previous episodes, Josh and I, you and I explored, who might be, what the possible exit routes for some of these things might be. Don't know. Also this week, MoneyLion is raising 160 million Series C. Has raised. Capital One entered as a strategic investor in that round. I thought that was worth mentioning. Josh, you and I were talking before the show how that kind of signals like the first, real bank kind of coming in and investing in these guys.
Yeah, that's really interesting. The fact that they're getting that a bank, and a pretty large bank,
Mm-hmm.
is coming into a challenger. So I'm really interested to see if there's going to be any sort of, is it just like a investment? Like, first of all, where it comes from? Is it from their venture arm? Is it from their R&D arm? Like, where exactly, how that investment is structured inside of Capital One is interesting. And if there's going to be any strategic partnerships, or any type of uh, any type of cooperation going on. And it's also interesting that they actually took money from Capital One. Like, if you think about it,
Mm-hmm.
like, it's pretty cool that a challenger bank is like, yeah, you know what, we'll take money from an institution. It's really interesting, from an institutional bank. That's really interesting, the fact that they even went that route. And I don't imagine there'll be any blowback on the side of customers, but it would be interesting to see sort of how it's going to work with regarding any type of partnerships between the two together.
Yeah.
And they do have good marketing strategies, as you and I were discussing before as
Yes.
well.
MoneyLion is well known to be the first fintech to sponsor NASCAR. And one of the
Ricky
reasons why we
Bobby,
love them.
the Ricky.
Yeah. Shake and bake. So Capital One also, it's worth mentioning, had invested in Dave, which we also covered on the show. Dave was a PFM, personal finance manager, that recently just launched banking capabilities. But when they did invest in Dave, it hadn't had that yet. Also, Dave had 3.5 million users. It will be interesting to see over time how many of those convert over to banking customers. And again, as we've kind of hammered home on this show, is like, it's not just account openings. Those are the headline sort of metrics. It's really, can we get people using these accounts as sort of a primary or core bank account for them? No one's really seemed to crack that nut yet, but I think that's worth tracking over time.
Yeah, definitely.
Yeah. And so moving on, Betterment has launched a bank account. Actually had a smart savings functionality built in there. Sort of was really sort of a money market account. So to get short-term yield, you actually owned like some ETFs. So there wasn't a lot of liquidity there. It took 3 to 5 days to clear the trade afterwards. And so Betterment, just like everybody else, is coming out with their own sort of bank account. Interesting, called Everyday Savings, with a high APY, like probably, I think, that 2.69%, which is the highest in the market today. No fees, $1 million FDIC insurance. I don't know if it's a revolutionary product, but it is definitely evolutionary product. And interesting to see a robo-advisor kind of come in with a best of breed sort of savings product. I think it services their existing clientele, but B, also maybe a way to encourage and recruit in some new investors, right?
Yeah, if we talk about banking, open banking, and having, a product that's like a checking front end, checking savings, moving money around, and then all these additional functionality in terms of product, on top of that. And they built an awesome product, and now they're building the front end. So,
Mm-hmm.
like, if someone wants a really good robo and they want to also use a bank account, if that's what their big need, then I would imagine that Betterment is probably their best choice, because the fact that they're a robo that just has gotten a lot of traction. Now, whether or not you agree with you like robos is other discussion.
Yeah. I don't know if that matters much. My point was just that it could happen the other way too. Meaning, if they build a good enough bank account, I may go to them as my core bank, and then be encouraged to use a robo. Sort
That's
of behind it.
no, that's sort of what I'm saying, is that also, if it's going to get to a point where the end user is just going to have so many choices that they're going to be able to pick as thin as possible. And you and I joked around that, like, how like thin are you going to be able to get everything? Like, could you get to like a bank special that's going after dog walker niches, or like, what, like how niche can you get in terms of of banks and what they're providing. But it, and to be serious, like there's going to be, it could be that, that what's it called, that a money line star with, like, personal finance. So maybe that their personal finance product is just better than everyone else's. I'm just saying theoretically. And then I'm an end user and I'm like, you know what, I want a bank account, but the most important thing for me is to have really good personal finance. Then I would just go to MoneyLion,
Mm-hmm.
and they would be and it's going to get to that point where, like, you have all these products, and then, hey, I'll build a front end, bank account on top of that, child debit, credit, whatever you want to, checking account, whatever. And it'll really be those underneath products will be the things that are interesting, as opposed to open banking, where, we thought that what things would happen was just everything would just connect into each other. It could be that there's eventually it bundles back together, but it could be that there's an unbundling first.
Interesting. I like where you're headed with that. So Curve also, which is based in the UK, which is basically a credit card that sits on top of other credit cards.
I think I interviewed them back when I worked at Tearsheet, like back in the day. That was
right?
like way back. That was like, geez, 2000.
So,
I don't even know. Yeah.
So they survived somehow. And I'm not saying that in a bad way. But $55 million round, I think. But and I'm not getting too deep into Curve itself. I don't know enough about the company, but it's sort of a credit card that sits on top of other credit cards. Are you describing sort of like, the future of banking where, maybe you have like a Spotify type platform where, you're pulling stuff from different places, like you're getting PFM from MoneyLion, and maybe you're getting the bank account at Betterment. Do you see something like that happen?
Well, isn't that open banking sort of where, except that
It's weird because we always talked about open banking as being like dumb pipes, right? Like
exactly. But the thing is, but the problem is they're all coming out with these front ends, so it's going to be really weird. So while we thought it was going to be open banking of like, hey, you have one front end as like whatever, and then all these pipes come together, all the back ends are just, all the pipes are decided to create their own front ends, which could be really interesting, in terms of how that goes. Then, how did the whole mantra, which you and I think agree on, and something we've been discussing for a long time, is that the long term, way that it's going is the pipes and pipes model, and open banking. So where do those two drive together as everyone is just racing to onboard customers? It's going to be really interesting.
It is interesting, and so you have this features parity, right? This idea that like every time a new challenger bank launches a new product, maybe it's payday advance, it just gets rolled out within months across all the other challengers, right? It's like a lot of these banks like started as like features led companies, but over time, just where every product you're getting is going to have the same functionality, and give the rise of banking as a service companies, right? So if there's a platform underneath that are serving a lot of these challenger banks, everybody gets the same products at the same time. And so like in a way, we're seeing sort of like the generalization of all these financial products, but the ones who do it right and can kind of build the brands, I think at the end of the day, it's what's old is new. It's like the brands are going to end up winning out. And right. So MoneyLion is my brand because, I like NASCAR and I affiliate with that. And I like kind of the groove that they're giving there. It may or may not have, it probably has very similar functionality to any other competitor, but I'm going to go with that one.
Yeah, especially with banking. I'm going to create a new term. You ready? Banking service as a service, where these like
the SaaS,
the SaaS, where you have like now I've been seeing companies that like basically the engine for risk assessment that like Fundbox and Bluevine and Cabbage, and Easy Bob, all these guys are creating. Like there's companies that are like, yeah, we're going to do that. We're providing that to like companies. Now you have like an alternative lending engine that N26 could
lending as a service, credit as a service,
like so it's like a banking service as a service. So like exactly what you're saying, that it could become like everything is the same essentially, with these weird tech companies underneath it all, where on the stack, and it's unclear what exactly where exactly everything flushes out. But it's cool.
It is cool. There's a lot happening, even though it's summer. Wishing you guys the best rest of your summer. Don't work too hard. Take some time off. Go to the beach.
Beers on the beach. I'm going Thursday. You can join me if you like.
I was there last Friday. Recharge your energy cells, and let's look forward to a exciting fall. I think the fintech is going to be on fire in the fall.
Can we get some summer music on the podcast, or are we gonna still? Or I still love the piano, but we need some summer.
We're going to end with the
also.
piano, but I think we can start mixing up. One thing Josh and I talked about before the show that we'll mention on social media as well is that we'd like to start answering questions. So if you do have questions or a theme or a topic that you guys would like to throw at us that we can discuss, we'd be happy to take a look at that. So best way to do that, AMA on the TC podcast, the challenge. AMA and TC. Okay, I think we've done enough of that one. Thanks for listening, guys.
See ya.